overnight. Well, Paul Dietrich is CEO and Chief Investment Officer at Fairfax Global Markets. He joins us now live from New York. Thank you so much for your time today, Paul. Let's get back to that tax bill and the idea of economic prosperity. You said that the legislation's greatest achievement is essentially reforming the self-destructive top U.S. corporate tax rate of 35%. That sounds great as a headline, but it really does boil down to some companies are going to win from this, some companies are actually going to lose out.
That's exactly right. What investors have to understand is that this tax legislation does not affect all companies equally. I mean, I've spent the last 3 days reviewing all 1,100 pages of this tax legislation. And this tax reform legislation is true tax reform. It gets rid of hundreds and hundreds of tax loopholes and tax deductions. And I can tell you, every analyst on Wall Street this week is going to be analyzing all of those things and determining how it affects every company that they may or may not want to invest in. And you have some companies, especially some of the tech companies that sell most of their goods overseas, that pay very, very low taxes because they're able to hide or keep their cash offshore and haven't brought it back in order to avoid taxes. A company like Microsoft has about a 13–14% effective tax rate. It may be harmed by this tax reform legislation. But then you look at all the companies that get most of their revenues in the United States, and these companies most of them pay the full 35% tax rate, and now that's going down to 21%. They're going to get a massive boost to their revenues and earnings, and their PEs are going to go down, and it's going to be a restructuring and repricing of the stock market like we haven't seen since 1986 during the Reagan tax reform, when the whole market was repriced. And that's going to happen here. And there are going to be some companies like AT&T, Verizon, Home Depot, CVS, companies that get most of their revenues here in the United States. These companies are really going to benefit from this tax reform legislation. A lot of global tech companies will not get benefits, but oddly enough, Amazon, who gets most of their revenues from the United States, they actually may benefit a lot from this bill.
So true to form, it is a pro-USA tax reform. It's an America First tax reform, and I know you've compiled a list of the companies. You mentioned a few of them there, like AT&T and Verizon, that get a lot of their earnings domestically. You've got other ones here like Altria, Charter Communications, Dollar General, CBS, Comcast, CVS. You mentioned Home Depot, that are also going to be beneficiaries of this tax reform. So the question here is, if you're an investor in this market, what percentage of S&P companies will actually see their earnings being hurt from the tax reform?
It will be about 30 or 40%. It's hard to say exactly because the S&P 500 is a cap-weighted index, and there are 5 or 6 big tech companies that make up the bulk of the capitalization, and only Amazon is probably going to be a major beneficiary of those, what they call the FANG stocks of the big tech companies. If you look at small caps, mid caps in the United States, and an awful lot of U.S. companies that get most of their revenues from the U.S., these are going to be the major beneficiaries. And you're already seeing some weakness in selling the tech stocks and a movement over to what a lot of people consider the value stocks, which is what most of these companies that make most of their revenues here in the United States are. So I see next year a really big boom in value stocks and value investing. Those are going to be, I think, the major winners out of this tax reform legislation and this repricing of the U.S. stock market.
And so you say we're already starting to see that rotation in anticipation of how this is going to pan out in 2018. We've had some incredible gains for the 3 main indices, haven't we, this year, 2017. It's about 20% for the S&P, 28% for the NASDAQ. 25% for the Dow, a very, very difficult thing to replicate. What kind of digits would you expect in terms of a return next year from the markets?
Well, if you look at this repricing and the earnings boost to an awful lot of companies in the United States, and earnings do drive the stock market, I believe that we're going to see double-digit growth. Now, will we see the same massive growth that we've had this year? I'm not sure, but I believe we will have double-digit growth next year. I believe we're going to see 3% at a minimum of GDP growth next year. If you look at not only all the fundamentals of the U.S. economy and the global economy, they're all trending up. So I don't see anything fundamentally that's going to really trip up the stock market. I think if there is a correction, it will come from some political or geopolitical event. But if you look at the forward price earnings ratios, according to FactSet, it's about 18.3 as of last Friday. That's about 16% ahead of what the 5-year average is for the U.S. stock market. So you could argue that the stock market is a little overvalued. But even if there's a correction, if it doesn't go down 16%, we'd still be going back to about fair value.
Yeah, I mean, even if we're a little overvalued and a little overbought, you can stay in that territory for quite some time, can't you, Paul? Very quickly, question on disclosure. Do you own any of the companies that you singled out, Paul?
Yes, I'm a value investor at Fairfax Global Markets, and what I've done is I've moved all of my stock portfolios into those companies that have the highest effective tax rates now, meaning those companies that are paying the full 35%, they're going to go down to 21%. I believe for investors, these are the stocks that are going to do the best next year. And I own them all.
Thank you so much for joining us, Paul Dietrich. Okay, thank you, Paul Dietrich from Fairfax Global Markets. It looks like it's nice and chilly out there in Central Park. I believe they're starting to get some flurries of snow, my favorite time of year.